The FTSE rose 1% on Wednesday to a new record high, despite higher than expected inflation being reported before the market opened. Initially, the index traded lower after the ONS said that inflation hit the highest level in 18 months at 3.8, only slightly 10 basis points above the expectation, due to high airfares and petrol. Importantly, services CPI accelerated to 5 from 4.8 expected. It has been sticky and it appears that it's getting out of control. Following the data release, expectations for a rate cut from the BOE are reduced to the point where markets do not expect a rate cut from the BOE this year. But still, FTSE did move higher. And this is primarily because it's way of global companies. Okay. Analysts do also point, of course, to a concurrent drop in US tech stocks, suggesting that the gains in the FTSE could have been driven by investors rotating out of high valuations in the US into defensive plays in the UK. Stocks listed in London remain undervalued, if that makes sense, right? Which can explain the gains in Unilever, BATS, United Utilities, and other stocks which have helped the FTSE hit new highs. But whether their momentum can be sustained might depend on what happens in the Jackson Hole Symposium. Of course, the dollar is still king. Slow US growth amid high interest rates could keep the rotation out of tech, but the lower interest rates could bring back risk appetite, reversing the recent gains in the FTSE. Now we'll look at it, the FTSE in the longer term. You see that we have moved outside this channel and we're looking bullish. However, there is different ways we can actually use this channel to look at where we are. One way would be to connect these lows and that high, looking like a move to 9500s would be possible. However, there is also a more correct way of correcting the initial leg, right? Which, if you can see, also was the driver of the decline back in 2023. And why I would do this is because typically we can use that channel again in a standard deviation sort of fashion to forecast where prices might go, right? So essentially, what we would be doing is we would be placing these from there to there, okay? From there to there, we come down to standard deviations or the deviation of the channel from the initial first channel. And look at that where it brings us, right? It brings us, first of all, to a rejection over here, quite a few actually. And currently, we are looking like we are getting very near the next few more points to a potential rejection as well, right? So if we look at the RSI, it also shows that there is potential divergence and momentum waning, right? So essentially, that could be one of the last legs to the upside for the time being, right? It doesn't mean we cannot penetrate inside the channel as we did in the past. However, we might, it might be a short-lived penetration and then potential pullback to the downside. Now, either way, we've got to look at this from a different perspective as well. It's a very similar case with the Nasdaq, I would say. There is an open triangle here, okay, which has again moved above the upper trend line. This tells us that because we are in a price discovery territory, right? This tells us that it would be a good idea to go and start figuring out, okay, where prices might head towards to the upside using the Fibonacci tools. Now, I'm not sure how familiar you are with fractals, but what I see in this larger open diagonal, open pattern, I do also see down here. Okay, so we can use the bar tool. Hold on, I will get it out. Um, the bars button. So if we go from there all the way to, well, let's say here even. Let's just go here, right? You see, this is the pattern that we currently see. So I want to take this, I want to miniaturize it, if that's a word, and I want to show you how similar this pattern looks, right? In not specifically to the point, but we are looking at a potential, open triangle here as well. So with that said, if this is our open triangle here, right, and we have moved higher up from that level, what we want to do is we want to measure the distance from the breakout up to the recent high, which would be, hold on, we are the price range from the breakout, let's say up to the top, we're talking about 1.7%, and uh, use this 1.7%, right, upside gain from the smaller triangle up. So one case would be these, because we're looking at the distance of the larger sort of move, and the other one would be us looking from that point. So what we want to do now is measure 1.7 above that breakout point. 1.7 above that point will bring us up to around the 9.4. Okay. And what we want to see now, we want to confirm whether this would, well, this is the smallest point to be fair, but whether this on the RSI, on the Fibonacci, uh, gives us a potential level to kind of merge and bring in confluence. Well, the 161.8 Fibonacci extension of the first leg of that triangle brings us up to 9367. So to me, these levels look very close to one another, right? So we're talking maybe one session, perhaps even no. So one of the levels that I'll be looking to start considering here that we might see a pullback will be anywhere between the 9.367 and up to around the 9.4. Okay, obviously there is multiple ways to do this, and we're looking at the very long term and the very short term currently. But we could use like multiple ways of to work to work potential levels to the upside out. But with the current price action, breaking to the upside now, the momentum is still remains on the 4 hour. What I am seeing happening potentially is that, since we don't see currently divergence, would be looking for a potential move to the downside and something like this, and then perhaps a move to the downside. That would allow the higher price with momentum falling, that would see an RSI divergence, right? Something like this would happen, and then eventually that could drive us to lower levels. But then again, it not just depends on what the chances for the BOE are. It's mainly, a hawkish BOE, hawkish data are negative for the FTSE. So I think there is more a weight to put into this on what happened in the US, because in the US stocks are overvalued and in the UK are undervalued. But currently, this might be the case. Following the FOMC minutes as well yesterday, because they seemed to be a little bit more hawkish than others expected. That's why we saw the drop in Nasdaq. So if Fed chair confirms at the symposium this narrative, and he is more hawkish, we could see FTSE continuing to the upside. But if Powell kind of shifts this the narrative, and he's a little bit more dovish or neutral, then maybe we're going to see the flows returning back to US stocks, which would suggest that perhaps the FTSE might start losing its steam indeed.